Coinbase is not protecting retail investors. They're just feeding them scraps after institutional money has extracted all the value already.
And you know what's crazy? I'm still in touch with my friends from Wall Street and they know it. So they're not buying on Coinbase or Robinhood. They're in the native markets. That's where they are.
What's honestly super sad is that when people are investing through these platforms, they've been sold the dream, right? But they don't understand that they're actually just getting the leftovers. So sad.
It's not even leftovers. They're exit liquidity. You can't call that anything else. The one example that is like so telling is WIF. You see it everywhere. It's over 1000x for those who got in the native markets, and Coinbase lists it. It goes down 80%.
Yeah, like people don't seem to get it. But these tokens don't come out of thin air, right? They come from the native markets. And honestly, like this feels way too coordinated. It's not random. People know what they're doing. The people who are orchestrating all this. They understand the market. They understand how it works.
It's definitely intentional. I mean, these guys are smart. If you're a business owner, you understand how it works. If you were Coinbase, when would you list a specific coin to maximize the profit for your company? When would you do that?
At peak hype, obviously. Like when it has the biggest trading volume and everybody's talking about it.
Yeah, because from there it can only go up, right? It's always the same story, right? Some investors who are well informed buy it early in the native markets. They hype it up. Eventually media or social media picks it up. Then max peak hype. And that's when retail wants to FOMO in and Coinbase is going to list it. Makes sense. And so when Coinbase lists it, all the guys who invested firsthand start exiting and it changes hands, right? You have the new investors, the Coinbase investors that come in and buy the top.
Yeah, and basically by doing this, they're not really serving retail investors, right? They're serving institutional investors, smart money, and basically retail investors become their exit liquidity.
Exactly. Coinbase makes money when? From trading fees, right? They don't make money if Joe and John had tremendous returns. They don't care about that, right? They don't want them to buy and hold. They want them to come in, buy, panic, sell, buy again. But it's at the top where you have max volatility. So it's perfect for them. Wall Street would never do that. Like, how do you think they get their information? How do you think they know which one to buy?
Well, that's where like the notion of like inner circle comes in, right? Being connected with like banks, regulators, project insiders, and all these people who basically have the news before it comes out, have the alpha before it's public.
Exactly. I mean, I was working at banks before. We always know before because these founders, they need funding, they need contracts, they need to sign deals, etc. So we hear it from them directly before anything is public.
And you know, it's funny because if this was traditional finance, this will be totally illegal, right? This is actually insider trading. But because it's that new world of crypto, there are no regulations for stuff like this.
Yeah, it's totally fine. So in traditional markets, you have those Chinese walls. Now, it doesn't mean that these walls don't get broken, right? But you have rules. In crypto, it's fine. Like it's allowed. So that information asymmetry, if you have that information, go and bank on it. Like make money. It's fine. And so that's the big difference, right? Because crypto is freedom. And so freedom means no real like rules. And so you're allowed to do it.
And the crazy thing is most people have no clue that these native markets exist and where like that's actually where everything is listed before big platforms like Coinbase, Kraken, etc. Maybe we should decipher it a little bit and explain what the native markets are to our viewers.
Yeah, so native markets are basically decentralized exchanges, right? That's where tokens list initially. First investors get in, you get the price discovery. Those who are crap remain crap, and those who start going up eventually reach a critical size. And that's when Coinbase, Robinhood, Kraken eventually will decide to list them, right? They need a certain history, a certain size, a certain documentation, demand. And so the great opportunity really is in the native markets. That's where you can make tremendous returns that just are not available on Coinbase or Kraken. And also, with native markets, the good thing is it's self-custody. So you have to learn how to custody and own your crypto, versus when you buy that on exchanges like Coinbase or Kraken, they can custody your coins for you, right? They remain on the exchange.
And you don't have the choice. That's what they do anyway.
Yeah, I mean, you could just buy from there and bring them home, I would say. But that's also their business model. They want those funds to stay there, just like a bank would do, right? Like in a savings account.
Yeah.
And so they can use it. But you saw, I mean, it's not very safe, because you saw what happened with just now in 2025, Bybit, $1.5 billion hack of customer
Crazy.
funds, and Coinbase, $400 million of customer funds vanished.
2 weeks ago, right?
Yeah.
Or a week ago. Insane. The crazy thing is, these are like mainstream exchanges. Like everybody know them. Everybody has an account in these exchanges. So imagine the smaller ones. And the cool thing is with native markets is that if you follow the right security practices, you are in total safety. Like your funds can't get stolen online. You can't get hacked by design.
Now there's a debate, right? Would you rather have all the security, liability on yourself? Meaning, do you trust yourself more, or do you trust Coinbase more to hold your funds?
Yeah, that's a very good question. And I can understand why maybe people at first are like a little bit skeptical, because they need to learn something. But once you learn it and once you understand it, you realize, I mean, I would never leave my money in a bank now.
Never.
Like that seems so like far from that new world and that new paradigm we're entering in, which makes way more sense.
No, I mean, with what happened with FTX as well, let's not forget it. BlockFi, Celsius, all these guys. What we hear from the members is clear, right? They just didn't know how to do it, but of course they would rather pin it on themselves. Like if they know how to do it, they'd rather just have their own funds under their own control. I think there's a big distrust now in the financial system and companies, and that's why I mean, for me, you should always have total ownership of your funds if you can do it. And especially if on top of that, self-custody also means having access to the native markets and better returns, right? Because that's what we all want.
Yeah, true. And so let's get into the good stuff, right? For people, crypto is all about chasing these 100x gains. And they think it's about looking at charts and being like the best trader ever. But the reality is it's more about being at the right place at the right time, right?
Access.
So personally, right, I'd rather look at the team behind the project, understanding the value proposition, but also, especially, the timing, which is one of the most important components. Do you agree?
Yeah, I mean, so many people tell me, oh, XRP is still cheap. It's only $2-3. It's going to 100. People don't understand that if XRP went to $100, it would be more valuable than Apple. So it's probably not going to happen because they don't understand the difference between price and market cap. And why am I talking about market cap? It's because in the native markets, you have smaller market caps, so more room to grow. So that's timing. Native markets is timing. You're just early. When Coinbase, the market cap has grown, there has to be a minimum market cap reached for them to even consider listing it. So it's just by definition, by function. You will not have the smaller market caps, and so the early stage projects on these mainstream exchanges. So timing is big. Then yes, you have team, value proposition, doing your research. Now again, if you're not a pro, how are you going to do the research? Well, typically, it's good to be in connection with people who know how to do it. Let's take the example of Ondo. Okay, we bought in at launch around 20 cents. How did we know? Well, fundamental analysis, we spoke to a lot of people before the launch. Technical analysis, we understood also, I mean, it's at launch, but we understood right away after the first movements, it was going to go well because it didn't dip much. The overall valuation at launch was not like humongous. There was room to grow, and mainly timing and connections. So, and that's the most important piece, right? We knew that there was going to be a partnership with BlackRock that would be announced eventually. And so Wall Street was buying, we were buying thanks to our connections, and so our members were buying. And fast forward to today, it's at probably a 6 to 7x return for now, and we think it has way more room to grow.
Yeah, you're right. So you mentioned access, all right? Maybe it would be a good idea to explain to our viewers how to access these native markets safely.
So to access them safely, you need a decentralized wallet. You need to set up a hardware wallet that protects your decentralized wallet. And then you need the list of the decentralized exchanges that are safe to navigate, right?
Very important.
Each big major blockchain has its own set of decentralized exchanges, often is one big one. You want to go through these. And then that's where you can start scanning, right? Which assets themselves are safe and those who are not. So how do you access them safely? You have a little tech stack that is not that big, right? You need to understand a few things. You need to set it up well. It doesn't take much. But then what you really need is to access them safely. You need to understand the safety measure and how you interact with these websites, which ones to trust, which ones to not. And that's where having a team is super important, because the next step will be, okay, but I'm navigating safely in the native markets, but what do I buy?
Yeah.
It's not about like the exchanges themselves. It's more about the assets now.
Yeah, because at the end of the day, you don't have the time to be an expert at everything, right?
And there's thousands of them.
Yeah. So having a big team of analysts who are like dedicated to doing this every day, morning to night, right? Team of nerds, we call them like this. That's very precious.
So let me ask you this. You're the co-founder of Decentralized Masters, right?
Correct.
How do you interact with the native markets? Let's break the myth. Like when you buy an asset on the native markets, typically how does it happen?
Look, let's be honest. It's funny because as the co-founder of Decentralized Masters, people believe I'm an expert at every crypto that comes out, which is not the truth at all. Like, I wouldn't care less about knowing about all cryptos, but I have access to these people who know about all cryptos.
Who are these people?
Our team of analysts, our team of experts.
So the biggest myth out there is that, they must know something we don't know. We just have a team. We use our own team. The reason why we put together this company is to have that research team, of course, for our members, but primarily for us.
Like, I remember at the beginning of this company, our vision was to build something we will use ourselves.
Yeah, if it helps us make more money,
it will help people make more money.
But it's already enough, right? Initially, that's what we thought.
Exactly.
And so we hired the best of the best because we don't have time to scan the markets, but they do.
So, all right, I think people understand native markets are the thing. Now, let's be totally blunt and honest here. What are the cons?
You tell me what are the cons? Because we met in 2021.
Correct, yeah.
Okay, and the bull market was like starting. And so you access the native markets, what happens?
Well, from the outside, it seems extremely easy. But when you start to experience it, you realize it's a jungle. You can find anything there, from scammy projects to like extremely legit 100x kind of projects. So it's extremely dangerous for someone who doesn't have access to the same kind of information we have at Decentralized Masters to enter native markets by themselves.
So basically you're saying having access to the native markets is a necessary condition to have the potential 100x gain.
Yes.
But it's not enough.
Exactly.
Okay, so it's not enough because it's a wild, wild jungle out there.
Exactly. If you don't have the safety layers that we built for our members, honestly, good luck, man.
Okay, so you accessed the native markets first, and then we met, and then I showed you the ABN system. Yep. What changed?
Clarity. Honestly, don't have to second guess every decision. A clear plan, a clear process, and basically getting real results without spending my whole day thinking about crypto.
Exactly.
Like a maniac.
So for those who don't know the ABN system, right? A stands for all-weather portfolio. We start with the right allocations based on people's risk tolerance, and we don't go crazy into risk, quite the opposite, right? There's very precise allocations that you follow, and it's all built according to the CFA principles. So you start with your risk tolerance, your investment plans, and the allocations. Step 2, the B stands for Become the Bank protocol. You start with stablecoins. You provide liquidity. You get passive income from stablecoins, so no volatility.
Better than the few, like 0.01% that your bank is giving you in your saving accounts.
Exactly. So you get 10, 15, 20%, depends on literally US dollars, right? When the first profits come in, then you go into deploying your blue chip cryptos that you intend to hold anyway. Bitcoin, Ethereum, you're going to hold to them, right? Why not make extra cash flow with them? 10, 15, 20, 30% extra, depends on where. And then once you get profits from this, with the profits only, you go into the native markets and you go for the home run. And that too, with amazing research from people who actually know how to spot or have a history of spotting the right projects with tremendous gains. So that's the overall strategy, right? And so there is no guesswork involved. There's a system.
All right. So if people are curious about these native markets and this ABN system, I guess they just have to tap the link probably around this podcast somewhere, and they will get more information.
Exactly. They can apply and see if they can work with us.
If it's a good fit.
Exactly.